Oh, I'm still admitting a few more, so just one second.
Yeah, no worries.
Is my screen visible to everyone?
Yep, I see it.
Thank you.
And we are recording, Ethan. Whenever
All right.
Whenever you want to get started.
Yeah, will do. Thank you for joining us today to discuss the individual and small group health benefit rate filings for 2027. I am Ethan Baldwin, Policy Advisor at the Oregon Division of Financial Regulation, and I will be hosting today's hearing. Insurers offering individual and small group health benefit plans are required to file rates for approval with the division. For plan year 2027, insurers were required to submit their rates to the division no later than June 3rd, 2026. Once submitted, division actuaries review the submitted rates to ensure the rate is fair, adequate to pay claims, actuarially sound, and not excessive. Though the actuaries have begun their review for plan year 2027, no decisions have been made. Today, we will hear from the insurers about their proposed rates. Before we begin, I'd like to introduce the individuals from the division here today. Insurers will introduce themselves at the start of their presentation. First up, we have TK Keene, Administrator. We also have Kirsten Anderson and Alex Chang, Deputy Administrators. Tasha Sizemore, Life and Health Manager. Michael Sink, Tim Hinkle, Drew Bucks, and Ying Lu, Division Actuaries. Numi Griffith, Senior Policy Advisor. And Jill Slosser, Health Forms Analyst and Rate Review Project Manager. The remainder of the meeting will proceed as follows. Division policy staff will give a brief presentation. Information sharing from OHIM. Insurers will present their rate presentations, and we will close with public comments. Given the complexity of understanding the rate review process and the relationships between carriers and the division, we wanted to provide a brief consumer-focused overview of this process and the division's roles and responsibilities. Today, Numi Griffith, Senior Policy Advisor, will be giving a brief presentation on this topic. Numi?
Good afternoon, everybody. Just give me a sec to get my slides up here. Okay. We were just asked as the policy team to give a sort of quick overview that's more consumer facing as to how the rate review process works, what's considered in that, and kind of what we're expecting this year. Just to kind of start off, our role as regulator is really twofold. We are directed statutorily to approve rates that are reasonable and not excessive, inadequate, or unfairly discriminatory. So we're really trying to balance the sort of consumer interests in having access to affordable comprehensive health insurance coverage against our other role as the regulator of solvency for insurance companies, making sure that the rates are sufficient to keep the companies financially stable, able to pay all of their claims, etc. Okay, there we go. So this is a 2-year long, this is basically a 3-year long process that we start out with insurers looking back in the prior year at their experience with medical claims, because like that prior experience is the main way that insurance companies, insurance actuaries, including those working at the division, have to judge what costs are going to be in the future, looking at that past experience. This goes throughout the entire year. We're kind of right in the middle of this timeline in July with the public-facing rate hearings, and with final rates being approved probably in September of this year for plans that are going to be effective starting January 1 of 2027. Kind of wanted to give some context to the sorts of things that go into these numbers. Rate is really built out of sort of three different things. The cost trend, which is just what we expect the price of medical services and goods to be in the upcoming year, based on the rates of reimbursement that insurers are able to negotiate, et cetera, et cetera. Utilization trend, which is the extent to which members are expected to use services, and the administrative cost of operating a health plan, which under the ACA, the Affordable Care Act, all carriers are subject to a medical loss ratio requirement of 20%. So basically meaning they have to spend 80% of every premium dollar they collect on medical claims, leaving only 20% for all other things. For profit, if it's a for-profit insurer, for keeping the office open and the lights on. So most of it actually goes directly through to healthcare. All these factors go into sort of actuarial tables and numbers. They crunch the numbers and come up with a base rate, which is the rate that we actually as DCBS review each year. Of course, what an individual consumer experiences is going to vary. There's a few different factors that influence that. Age is one of those. As people age, they tend to require more and more care and more expensive care. Tobacco use is expressly called out. Family size, of course, if you're covering multiple people under a plan, generally you're paying a higher premium. Geography, because there's variation in prices for medical services throughout the state, and the actuarial value of the plan, which basically just refers to the amount on average that a consumer will have to pay for that the insurer will cover. So for like a 70% actuarial value plan, on average, the plan is going to cover 70% of all the medical claims that the consumer experiences. All these things, when applied to the base rate, come out with the actual monthly premium that you as consumers will owe each month at the beginning of the month. This year, we're really kind of expecting a few things to potentially influence that. One is that there is an expiration of subsidies that were provided by the federal government in addition to the sort of base subsidies under the Affordable Care Act. So we're expecting a smaller population overall. And one of the things that affects that base rate is just the number of people who are within the risk pool determines how far out you're able to spread that out. So that's going to be one of the big things, along with a generally high rate of inflation. Inflation affects medicine as much as other things, and in some cases more. So that's something we're looking at, both driven by just general inflationary factors as well as tariffs potentially. So that was just the quick presentation, and hopefully give some context to what this process is. And I'm going to pass it back over to Ethan. Thank you very much.
Thank you, Numi. Yeah, thank you, Numi. Now we'll have a little information from the health insurance marketplace. The rate filings we're discussing today may be adjusted to reflect updated exchange user fees that are under review by the Oregon Health Insurance Marketplace. Not all insurers reflected updated user fees in their initial rate submissions. The Oregon Health Insurance Marketplace assessment will increase for the 2027 plan year to fund operations, including the transition to a state-based marketplace as mandated by Oregon law. The assessment rate is impacted by a decrease in enrollment driven by several factors, including the expiration of the federal enhanced premium tax credits. Additional information can be found at https://orhim.info/4vi5don. This link will also be posted on the public rate review website after today's meeting. Details of the differences will be shared as part of the proposed rate decisions later in July. We will now proceed with insurer presentations. We'll proceed with insurers in alphabetical order, and each will have 5 to 7 minutes to present each rate filing. After all insurers have presented, we will have the opportunity to hear public comments. Insurer presentations will include an explanation of the requested rate, including the highest rate change to that a consumer might experience in 2027, an explanation of how consumers can reach their organization with questions about their 2027 rates, and changes to the plans or product offerings for 2027, including changes related to new legislative changes, network, service area, prescription formulary changes, and market uncertainty. Insurers may also address how the exit of Providence from the marketplace may impact consumers for 2027. We will begin with the first company presentation, which will be HealthNet.
Good afternoon. I'm Doug Hale, the Director of Actuarial Services in representation of HealthNet Health Plan of Oregon, and I'm here to discuss our preliminary small group rate filing scheduled to first impact the first quarter of 2027. Our requested rate filing reflects an average rate increase of 19%, which comprises of a minimum rate increase a member can see of 13.5% and a maximum rate increase of 24.8%. This rate action impacts 5,684 ACA members as of March 2026. The primary contributing factor to the requested rate increase is the increasing morbidity of the small group market, as the overall small group risk pool has shrunk over the last few years and the remaining groups are sicker on average. We are introducing 3 new plans for the 2027 plan year. One, a platinum plan, a gold plan, and a silver plan. We are not discontinuing any plan offerings in 2027, and we have made a few plan changes or a few cost sharing changes to our existing plans in order to remain consistent with the 2027 AV calculator. I'll slowly scroll through the next 2 slides just so that these changes are available for the recording. All right. We are making minor changes to our relative rating areas just to reflect the average risk that we're able to account for in the various rating areas. No network changes are anticipated for 2027 Q1. At this time, we are anticipating just 2 formulary changes that will impact 2027 Q1. I'll leave this up so it's available. And if there are any questions about our filing, consumers can reach out at our number presented on the screen. And that concludes our rate filing presentation for 2027 Q1.
Thank you. Next, we will go to Kaiser.
All right, thank you. Just a second, and we're going to share our presentation. All right, thank you for having us. This is David Liebert, and I've got Kitty Yang and Luke Hampton with us, and we will be presenting on the small group and individual rate filings for Kaiser Foundation Health Plan of the Northwest. We'll start with the individual rate filing. The average rate change represented by this rate filing is 12.3%. The highest rate change at 14.2%, and this is for Area 1. Just a second. And the change to the plan or product offerings for 2027, we have 15 renewing plans, no new or terminating plans, and no significant benefit changes. There are changes to minor plan designs to compensate for the for changes to the actuarial value calculator. I don't have this on the screen, I apologize, but this represents approximately 30,000 members. But we do anticipate that to be dropping significantly throughout the course of 2026 and into 2027 as the BHP implementation continues. There are no major changes to our formulary for 2027, and KP does not receive significant drug rebates. In 2027, our rate filing includes a load of 0.9% for the silver loading. That is the remaining members who will be on the 73% CSR plans. We do anticipate that the expiration of the enhanced APTCs in 2026, along with lower silver loading, they've had a significant impact on APTCs, as well as the movement of members. The members moving to BHP is causing the lower silver loading. And we do believe that this will continue to lead to lower projected membership and an increase in the average morbidity, as we assume that healthier members will be more likely to leave the market than less healthy members. And we anticipate that the Oregon state-based exchange fee, which we did not anticipate how high the exchange fee is projected to be for 2027, but that is the total impact we've calculated between 1% and 2%, and that will need to be factored into our rates in the future. And now Luke is going to present on small group.
Hello, this is Luke Hampton. I'm here to talk about Kaiser's small group rate filing. Our average rate change is 9.5%, with the highest rate change of 19%. Our rates do not vary by geographical area, so these increases count all across our rating area. Okay. No changes were necessary for plans or products to comply with any federal or state laws. There are no network or service area changes for 2027, and we are not terminating any plans in 2027. We are adding 6 new plans, though. Should also say that we have about 25,000 members that are represented in this filing. Our formulary is periodically updated. However, there are no major changes for 2027. And we are not making any adjustments in the small group filing due to uncertainty of either the market or the political climate. Now, they do allow quarterly filings in Oregon, and if there are some changes in the future that impact the filing, we will take that opportunity to do that at that time. And KP does not receive any major pharmacy drug rebates.
And we neglected to mention in the individual presentation the anticipated impact of Providence pulling out of the individual market. We do anticipate that to have an increase in morbidity, and that has already been factored into our rate filing for 2027. And that concludes our presentation.
Thank you. Next, we'll hear from Moda.
Okay, give me a second to pull our presentation up and put it in slideshow mode. Okay, so my name is Alex Vanos. I'm a manager of actuarial here at Moda. We have some other folks on the call. My team does our ACA rate filing, so I'm going to be walking through our individual and small group, starting with our individual rate filing today. So starting with the rate request piece, so the overall average rate increase for 27 is 25%. As of the rate filing deadline, we had 34,000 members enrolled that are impacted by these rates. They do vary by plan and rating area. So you can see down below, the minimum individual will see is 11.4 and the maximum is 35.6. And then listing the significant components. So a big piece of that is trend. So 10.2% of that is the annualized projected trend. Then we have a 4% projected market morbidity increase, and that's due to the expiration of the enhanced premium tax credits. So we are expecting that lower morbidity individuals are going to be more likely to drop coverage due to either reduced or eliminated premium subsidies. And so the remaining market, the market morbidity is going to be higher. And 26 experience is still emerging, but well, the best we can see in that emerging experience is still, a month or two after we did the rate filing, that 4% assumption still looks appropriate. And then for 27 rate setting, we're using 25 experience period with 2 years of trend. So another major component of that was just in 25, higher than expected observed trends, unfavorable risk adjusted experience. We saw our MLR or loss ratio tack up between 24 and 25. So, in addition to the 10% trend, some worsening experience is a big piece of another component. There's also some smaller impacts, like some others have talked about with, exchange fees and some of those smaller items exerted some upward pressure, but these three bullets are really the big pieces that contributed to the 25 overall. Okay, summary of network and service area. So in 26, all our individual plans were offered on our statewide affinity network. That's being renamed to Moda Select for 27, but it's really should look and feel the same to members. So as of now, there's no known or anticipated service area changes. Some provider negotiations are further along than others, but as of today, Moda Select plans will continue to be offered statewide in 27, and no known or anticipated service area changes. And then a change, something new, is we will be offering our new Moda Pathways network plans. Those are just going to be offered in the Portland area for 27. But this gives members in that Portland service area a second and lower cost network option relative to Moda Select. Here's our plan lineup. So on the left, there's 26 status in the middle column and 27 on the right. So we did discontinue some plans. We did some plan consolidation, but you can see up there at the top, we have the state standard plan. So 1 gold, 1 silver, 1 bronze. Those are all renewing. And then of our Moda affinity plans, we have 2 gold, 2 silver on and off exchange, 2 off exchange only silvers, and then 1 bronze. Those are all renewing. That next cluster down below, those are the plans that we discontinued. And so you can see, if you compare the left to the right, all of those are getting crosswalked to a pretty similar plan offering in 27 if members are on those some of those discontinued 26 plans. And then looking at Moda Pathways, starting out with 1 gold, 1 silver, and 1 bronze offering. All of those will be offered on and off exchange. Other changes in line with previous years, we did have to make some benefit changes to satisfy AV de minimis ranges for metal levels, make sure, all plans were fitting in those metal level ranges, and also to balance the overall portfolio. The most impactful from a actuarial value perspective was an increase in some of the out-of-pocket maximums for a number of different plans. And I know one of the things that we looked at is where the standard plans were set to kind of serve as at least a starting point and a benchmark for some of those out-of-pocket max changes. In terms of formulary, Stelara was moved from preferred to non-preferred specialty. And the reason for that is the biosimilars becoming available. So, members can still get coverage there. It's just going to be on the biosimilars landing in the preferred specialty tier. And then another change looking at drugs that had material spend attached to them, Skyrizi and Rinvoq were moved from non-preferred specialty to the preferred specialty tier. Our contact information is listed here. So really the best way for individuals to contact us is to navigate to modahealth.com. You'll see at the top, there's a contact us. That'll direct you to a page with a number of different helpful numbers and other resources. And as of today, current number for any medical coverage related questions is that 888-217-2363 number. And that concludes the individual presentation. So shifting gears to our small group rate filing. Some similarities and some differences. So the overall average rate increase is 22.7%. This segment's a little smaller for us. So as of the rate filing deadline, we had a little over 24,000 members enrolled in this segment. And then another difference is for small group rate increases, they're going to vary by plan and rating area, but also renewal date. So the minimum that a group and a member will see is 7.9 and the maximum is 33.6. And then since in 26, we did both a second and a fourth quarter rate filing in addition to the annual rate filing. The average increase is going to vary by renewal quarter. So Q1 is going to see the highest overall average at 28.5. And that's because our annual filing was a lower number than the second and the fourth quarter. So that 28.5 is going to be the highest because their 26 rate increase was a relative low one. Q2 and Q3 are pretty similar, 29 or 20.9 and 21.3. And then because we took a higher fourth quarter rate increase reflecting some of our emerging experience, that drops down to 13.1 as the overall average for fourth quarter effective dates. Significant components of the rate increase, we've got a little slightly higher based on what we're seeing, 11.7 projected trend for the small group segment. And then we're also seeing higher than expected trends and unfavorable risk adjusted experience flowing through the 25 experience that helps establish the 27 rates. Network and service area, a lot simpler. So no known or anticipated service area changes. In 26, we offered our plans on our statewide Moda Connexus network and continuing to do the same, offered statewide in 27. And then small group, more renewing plans. So we've got the Oregon, the standard silver and the standard bronze are renewing. We did discontinue down below the standard gold just due to very low enrollment on that one. That Connexus Gold 500, we discontinued that one. We're mapping that in crosswalking groups and members to our Connexus Gold 1000. That one just, the AV was well above the top end range for the gold range. And so we're looking at some pretty significant plan modifications needed to get that one down. So we decided a better option was to discontinue it and map it to a close equivalent. And then our third discontinued plan is a second silver HDHP plan. Again, just some plan consolidation where we had some lower enrollment. And so those members will be crosswalked from a 3,200 to still a silver, still an HDHP, $3,600 deductible in 27. So a pretty close equivalent. And then very similar to individual, had to make a number of different benefit changes to satisfy AV de minimis ranges for metal levels and to balance the overall plan portfolio. Really tried to minimize a lot of the copay, co-insurance deductible changes. So really the most impactful is some increases in the out-of-pocket maximums. And then same formulary changes that I described for individual. So Stelara moving from preferred to non-preferred with the addition of biosimilars in the preferred tier. And then Skyrizi and Rinvoq also moving from non-preferred to preferred specialty. And then our contact information, same thing. If you go to Moda Health, all the same steps that I described earlier, so won't repeat myself here. And that concludes our small group presentation. So I'll stop sharing so the next carrier can pull theirs up.
Thank you. Next, we will go to Pacific Source.
Thank you. Hello, my name is Emily King. I am an analyst on the actuarial commercial team with Pacific Source, and I'll be sharing our presentation. To start, Pacific Source will no longer be participating in the individual market for 2027. So we will just move on to small group. For small group, Pacific Source is requesting an average rate change of 24.4%. The rate impact for groups renewing in 2027 will range from negative 2.7% to 43%. And this range does include the varying increases by renewal quarter. The highest rate change that a consumer might experience will occur in rating area 1. And just to note, the area factor for rating area 1 was increased by about 4%. The main cost drivers of the rate increase were trend and worse than expected experience as medical costs continue to increase. For our filing, we used a medical trend of 8.7% and a pharmacy trend of 14.2%. For plan additions, 2 plans will be added to our portfolio for 2027. The Voyager Bronze 8000 and the Pilot Bronze 8000. These plans are very similar to our current Bronze 7500 plans, but they just add adult vision coverage. For plan discontinuations, 20 plans will be discontinued for 2027, and this is mostly due to their similarity of existing plans. The plans being discontinued are listed here on the slide. And additionally, the on-exchange variant of every plan will be discontinued, and Pacific Source will only be offering plans outside the exchange. To compare our plan portfolio from 2026 to 2027, there will be the same number of bronze plans, 8 less silver plans, 8 less gold plans, and no platinum plans offered for 2027. For network changes, the current Navigator network will be renamed to Pilot, and this will just be a name change. The Pilot network will continue to be offered statewide. And for the Voyager network, there will be no changes as well, and it will continue to be offered in the 4 counties listed. For benefit changes, there were changes made to the cost sharing for plans in order to comply with federal AV regulations, as well as to align with the market. One cost sharing change impacting a lot of our plans is that the urgent care copay will be increased to match the plan's specialist copay instead of the primary care visit copay. For pharmacy benefit changes, there are no major formulary changes for 2027. And if you have any questions and want to contact us, you can call the number or email any of these email addresses listed on the slide. And that concludes our presentation.
Thank you. Next, we'll go to Regions Blue Cross Blue Shield and Bridgespan.
All right, we'll start with Bridgespan. Just give me a second to find that and get it up. That's the wrong thing. Lots of windows open. Let me just share the screen over here. All right, that's showing up.
Yep.
Great. I'm Dan Bader, and I'm an actuary employed by Cambia Health Solutions, the parent company of Bridgespan. I'm a fellow of the Society of Actuaries, a member of the American Academy of Actuaries in good standing, and also the certifying actuary for Bridgespan's individual rate filing. For 2027, Bridgespan requested an average rate change of 11.7%, which impacts approximately 100 members. Since 11.7 is an average and a member's actual rate change will vary based upon factors such as age, plan selection, geographic location, and tobacco usage, the rate changes in this filing vary from a minimum of 9% to a maximum of 14.7%. The rates reflect expected cost of care in 2027, and the primary drivers are the increasingly high prices for medical care and prescription drugs. This rate filing assumed the 2026 exchange fees, so that would be an increase once those are finalized, and also the 2026 reinsurance parameters, which are being revised as well. So those would be some updates that would be needed post-request. Our product portfolio is not changed from 2026, so the 3 standard plans on the individual value network statewide, and there aren't any notable formulary or benefit changes. The filing also doesn't reflect any changes due to carrier exits, and that impacts the rate filing through an increase in the market morbidity assumption. And you can connect with Bridgespan at bridgespanhealth.com to get various phone numbers and email addresses as needed. That concludes Bridgespan's presentation. Janessa, can you share the
What was that?
Can you share the Regents one, Janessa?
Yep. Let me pull that up.
Given my technical difficulties.
Yes.
Perfect.
Okay, can everyone see that?
All right. Again, I'm Dan Bader, and I'm joined by Janessa Sanchez. We are both fellows of the Society of Actuaries and members of the American Academy of Actuaries in good standing, and we are employed by Cambia Health Solutions, the parent company of Regions Health Plans. I'm the certifying actuary for the individual rate filing, and Janessa is the certifying actuary for the small group rate filing. Cambia is a tax-paying, not-for-profit company serving nearly 1 million Oregonians annually, with most of our employees living and working in the communities that we serve. In 2025, Regence employees contributed over $2 million to nonprofit organizations in their communities and provided over 6,000 volunteer hours. We want to thank you for having us here today to talk about our rate request for 2027 individual and small group ACA health products. Next slide. So Janessa will talk more details about individual and small group rates and portfolio changes, but want to start at a high level. Health insurance rates reflect what we expect care to cost, and the primary drivers behind the rate request are the increasingly high prices for medical care and prescription drugs. For individual, our average requested rate change is 12.2%, and for small group, the average change is 15.6%. Note that these are average rate changes, and a member's actual rate change will vary based on factors such as age, location, and plan selection. This is the rates for individual assume the 2026 exchange fees, so those will need to be updated. As far as the carrier exits, that will impact our individual on exchange distribution for the marketplace fee. And then also market morbidity impacts for both lines of business. And then reinsurance as well is reflecting the current 2026 parameters, which are being updated for 2027. Next slide.
Hello, as Dan mentioned, I'm Janessa Sanchez, and I'll be discussing the individual and small group rate changes in more detail. For individual, our average increase for 2027 is 12.2% and impacts approximately 28,000 members. As Dan noted, the main driver of the rate increase is the increasingly high price of medical care and prescription drugs. Since 12.2% is an average and members' actual rate change will vary based on factors such as age, plan selection, geographic location, and tobacco usage, the rate changes in this filing vary from a minimum of 4% to a maximum of 17.7%. For 2027, there are no service area changes, but we will introduce the new Providence network in Clackamas, Multnomah, and Washington counties. We're offering 7 plans on this network. And as we introduce this network, we are discontinuing 6 plans from our individual Connect network in the counties where the new Providence plans will be available. We are discontinuing 2 additional plans from our individual Connect network and 2 plans from our Legacy network, and are adding 3 new Bronze plans across our individual and Legacy networks, individual Connect and Legacy networks. So in total, we will offer 24 plans across 3 networks in 2027. Moving on to small group. For small group, our average rate increase is 15.6% and impacts approximately 50,000 members. Like individual, the main driver of the rate increase is the increasingly high price of medical care and prescription drugs. 15.6% is an average, and group's actual rate change will vary based on factors such as plan selection, group location, and the age of enrolled employees. The rate changes included in this filing vary from a minimum of 6.9% to a maximum of 23%. There are no service area or network changes for 2027. We're discontinuing 2 plans from our preferred network, and we'll continue to offer 25 plans across our preferred and Legacy networks. And here you can see how to contact Regence. Thank you.
All right, next we'll go to United Healthcare.
Okay, let me share my screen. Can you see my screen?
Yes.
Good afternoon, everyone. My name is Rong Wu, and I'm presenting on behalf of United Healthcare Insurance Company and regarding our 2027 Oregon Small Group rate filing. And I'll cover 5 areas today. So our 2027 product portfolio and proposed benefit changes, network changes, the rate change request, and the rating factor change since our prior rate filing. For 2027, the portfolio includes 22 plans, 19 plans renewing from 2022, 3 new plans, and 1 discontinued plan. The proposed benefit changes are minor, mainly just the cost sharing tweaks to maintain the AV compliance and to manage the utilization increase to keep the cost low for our members. In 2027, we continue to offer Choice and Nexus networks with no changes. Now I'll now turn to the rate change request. The legal name of the company offering these products is United Healthcare Insurance Company. Across all 4 quarters of 2027, from January through December, the requested average annual rate increase is 28.9%. The increase varies by plan, by area, and renewal date. So the average increase ranging from 20.6% to 34.3%. The combined impact of plan mapping and the benefit change is negative 0.3%. The requested 28.9% rate increase is primarily driven by the trend and the experience. The trend reflects the higher expected medical and pharmacy costs, and the experience reflects recent claims experience relative to our current rates. And beginning January 2027, the quarterly trend increase is 3.6%. That equals the annual trend of 15.2%. In terms of member impact, this filing affects 7,199 members based on the March 2026 enrollment. As noted earlier, the filing includes 22 plans in total, 3 new plans, 19 renewing plans, and 1 discontinued plan. Finally, I'll summarize the rating factors that have been changed since our last filing, which was submitted for 4th quarter of 2026. First, the base rate has been revised. The proposed base rate effective 1/1/27 is 12.3% higher than the previously approved base rate effective October 1st, 2026. And secondly, the quarterly pricing trend has also been updated from 2.5% to 3.6%. On an annual base, it is from 10.4% to 15.2%. Also, the plan factors or plan relativities have also been revised. No major formula changes in 2027. And that concludes the presentation of the 2027 Oregon Small Group rate filing. For any questions, we could be reached through our website or customer service at 1-800-657-8205. And thank you for your opportunity to present this filing, and thank you for your time and consideration.
Thank
you.
you.
Thank-
Go ahead, Ethan.
I was just going to pass it over to you.
Okay, thank you. I mentioned earlier today, or we mentioned earlier today, that the public comment began shortly after June 3rd, 2026, and extends through today. To date, the division has received 8 public comments because 1 came in during this meeting. Though we do not have time today to read them all, the division has reviewed them, with the exception of the one that just came in. The themes in these comments revolve around the affordability of coverage when rates continue to increase year over year, the uncertainty and loss over losing insurance providers, and the frustration of finding new medical providers, the network limitations specifically in the individual market. There were multiple comments specifically regarding individuals at or near retirement age, and the increased difficulty the increased premiums are to absorb as they exceed the cost of living increase that retirees depend on. All submitted comments are available for public review at the Division of Financial Regulation website. The public comment will remain open through tonight at 11:59 p.m. If you would like to make a public comment on a rate filing now during today's meeting, please unmute yourself, state your name and the filing you are commenting on before starting your comment. Hearing none, I will turn it back over to you, Ethan.
Thank you. After today's meeting, the division will continue to review the rate filing, consumer comments, and information shared today to make our preliminary decisions, which will be posted to our website. A second public meeting is scheduled for July 31st, 2026, in which the division will discuss and explain their rate decisions. The division actuaries will lead the discussion and share information considered for each rate filing. This meeting will also be an opportunity for insurers to request additional consideration from the division. After rate filings are closed, there are resources for consumers from the division, including our consumer advocates, who handle complaints and questions from Oregonians who are experiencing difficulties with insurers and insurance products regulated by the division. As we wrap up today, I'd like to thank Michael Sink, Tim Hinkle, Drew Bucks, and Ying Liu, our division actuaries. Also, our health intake analyst, Mary Ellen Hayes, division and agency executive support, Yasmin Martinez, and our communications department, specifically Jessica Connect, for their support. Thanks also to Jesse O'Brien and Yumi Griffith in policy for their input and OHIM for their information. I'd also like to thank the insurers and their actuaries for the information provided today. Thank you, and that concludes today's meeting.
Thank you, Ethan.